Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.8% there. On the S&P 1.4%, semiconductor 1.2%, Dow 1.5%, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are red today. Bitcoin down, Bitcoin up, gold, silver, miners are down, dollar flat, oil up, treasury bond down. VIX is down a little bit. Let's stick with the S&P 500 ETF. Spider! 65-minute chart here. So this is what we close on Friday. And looks like that micro-term moving average continue to act as resistance here. As you can see, buyers are not able to get above this level. And throughout the day, all day today, market continued to deteriorate. And we're finding some kind of pause here at 378.43. We talked about the fact that this up gap is the gap that bears must fill the entirety of it. And the buyers are desperately seeking to protect this up gap, right? Because if buyers lose this up gap from, as you can see right here, in early November, if buyers lose this up gap, they really don't have anything to go against the sellers here. As you can see, the bears been working with. You see how hard it was for the bulls to go up and fill this down gap. As you can see, right, there's a huge down gap here. There were several, attempt to fill this down gap. As you can see, they didn't fully fill that. And we talked about the fact that when the gap doesn't get fully filled, things could get very, very hectic. And you can see, indeed, it did get hectic for at least in the last several trading sessions or so. You can see this market just completely plunged. Once we lost the level, it looks like all these short-term bulls are completely giving up. And you can see how that micro-term moving average is now been acting as a resistance for several days now. So now we're dealing with this up gap. And obviously, if you're a seller here, you want to make sure this up gap is completely filled. And if you're a buyer here, you do want to make sure that this up gap is filled. Let's check. This up gap is protected. Let's check out that oscillator. So that oscillator, as you can see, it's been mopping the floor here for quite some time, right? As you can see here, we're barely moving. Just kind of moving sideways here. As you can see, it's been sideways, flat for at least a couple days right here as the bears continues to push it down. So when you see the oscillator flattening out like this, any kind of a strong pop could potentially get the short-term bulls get a little bit rowdy, at least to retest this gap area right here, 386 or so, just because we're extremely oversold. Bears are getting tired. So if we do see some sort of pop, that could get this oscillator to kind of pop, at least kind of relieve that tension, right? And let the bears rest a little bit. And with that process, you could potentially see the buyers pushing up and at least retest this gap area. But right now, sentiment is bearish. We're below all the moving averages. That micro-term moving average continues to act as resistance. So the benefit of the Dow goes to sellers, unless if the bulls can reclaim that micro-term and just kind of go after that gap area. And for that to happen, we do want to see that oscillator kind of crossing back up to the upside. So going into tomorrow, objectives are clear. Bears, make sure you fill this up gap as quickly as possible. Do not leave any of it, because you know what happened when the bulls did that. When bulls failed to fill the entirety of that down gap from the September swing high, things got very, very difficult. Do not make the same mistake the bulls have made. So if you don't fill this up gap and leave them, you don't know what bulls are capable of just because that up gap still remain. You're gonna come back for you. We'll reassess the situation. Patient, enjoy your evening. Go trading tomorrow.
question? Sure, I got one question for you. It's, can you deal with that? Another question? Sure, I got one question for you. It's, can you deal with that?